All right, folks, and welcome to our investment banking career path, how to break into finance webinar. This is meant to give you more insight, perhaps actionable step guidelines for those of you interested in pursuing a career in finance. Where do you start? How do you prepare? What are the skills that you need? And what are some of the pitfalls that perhaps many individuals face when they're trying to break into the finance industry? My name is Romero. I'm the founder of Romero Mentoring, and I have well over a decade experience training, mentoring, working with individuals that want to break into investment banking. And we've successfully helped hundreds of individuals through our analyst prep program break into the industry. So I want to share some of the insights, some of the experiences, and also some of the formulas and steps that have been successful and worked for our students and other members in our communities that has led them to secure internships and full-time jobs in investment banking, hedge fund, and private equity. And again, give you that information so that you can make the best possible decision yourself and ultimately provide value. I know our time is very important and valuable to all of us, so I want to make sure that I'm able to give you the right information so that you can make the right decision. All right. With that being said, let's focus on some of the items that we've prepared for you here today. As I'm illustrating on my screen, what is the main focus and what are we trying to convey or communicate to you in this session? So, number one, learn how to prepare for the competitive world of finance and entry-level positions like investment banking analysts, hedge fund, private equity, to some extent, even consulting. We have many students from our program also work in the consulting industry. Number two, understand career opportunities within major corporate firms. Now, what does a hierarchy looks like for someone that wants to pursue a career path in finance? We're going to give you a framework on the roles and what that looks like in the career trajectory, also earnings potential. And third but not least, learn how to excel in your career. Just because you are successful in obtaining an internship in investment banking, hedge fund, private equity, and you're able to secure a full-time offer, does not mean that you're going to be successful, does not mean that you're going to be able to compete at a very high level. In fact, more than 80% of first-year investment banking analysts quit once they join the firm. That's a pretty high number that perhaps many of you may not be familiar with. But once you work in investment banking, it is intense, it's very demanding, and you do work more than 80, sometimes 100 hours a week. So how do you handle all of that responsibility and perhaps transition and adopt a new work culture, be able to perform in a different environment? So we're going to be able to talk a little bit about that. I'm going to be able to give you some of my own personal experience and insights to, again, give you more information and paint a clear picture of what a career in finance in reality looks like. With that being said, let's continue to our table of content. And the way we're going to present the information, or how we're going to keep the format of this workshop, if you will, is we're going to break it into 8 different sections. And in each section of this presentation, we're going to provide key information. So, for example, number 1, we're going to go into the big picture, understanding the financial service industry, where the pockets of opportunities are. If you're an undergraduate student, what is the typical career path? If you're a working professional, how are you able to switch careers or go into a specific role that you're aiming or targeting? Then after that, you need to understand your why. Why do you want to pursue careers in finance? Then you need to know yourself, your strengths and weaknesses. And is your own personality a suitable point, if you will, for a career in finance. And then everything else that follows, it's pretty straightforward that, again, it should give you a different perspective and insight that perhaps you're not getting anywhere else. So in terms of the big picture, when you're looking at the finance industry, at least here in the US, the economy, the US economy is over $21 trillion, employing over 157 million Americans. But specifically, within the finance industry, these numbers are from 2019, the top 10 sell-side investment bank employ 1.3 million individuals. Now, that's a big number. When you look at the buy side, this is private equity, hedge fund, and mutual fund. This segment of the US economy has assets under management. These are money that they're managing for pension plans, retirees, even their own employees or high net worth individuals. The total AUM concentrated within all of these top funds is 28.9 trillion. Now, this number is much higher. Today, we're in 2024. That number is now greater than $30 trillion. Okay, so again, that's just giving you some perspective. And look at the labor size. Look at the labor force. 50% less than working on the sell side. And traditionally, it's known in finance or on Wall Street that the sell side normally develops talent. Normally, you will spend 2 years in investment banking, equity research. You develop very strong technical and soft skills, and you transform into a professional, and then you move on to the buy side. Now, moving to the buy side is more competitive. It's a more rigorous process. The level of sophistication that you need to have is much higher because you have risk on. You're managing other people's money, you're making investment decisions, and you're deploying capital. So you are responsible for your decisions. And those decisions have an enormous impact on people's lives. If you're managing teachers' retirement accounts, firefighters, police officers' pension funds, it's a big responsibility. And this is why the buy side usually has a lower headcount of top performing individuals that are more entrepreneurial. They have a strong, deep passion for financial markets, coming up with investment ideas and deploying it, and also assuming risk. That's a big difference between the sell side, which is more transaction, sell oriented, versus the buy side, which is more risk and entrepreneurial focus. That's a major difference between the two. Then, of course, if you look at other segments of the US economy, you have big tech. They account for about 1.2 million. And then you have the top 10 Fortune 500 companies. They have a labor size of an average of about 4 million. So why is this information important? For those of you, if you have an upcoming interview and someone asks you, why do you want to work in finance? Why do you want to work in investment banking? Well, finance is a very important part of our economy. It has over 1 million employees. If you want to be on the buy side is managing over $30 trillion. It's risk on and an entrepreneurial mindset. So you need to know your why, and you should always back it up with data to support your answers. So this is just giving you some context and valuable information that you can use down the road for yourself. Now, in terms of the top 10 investment banks, here's a pretty clear picture giving you a high-level overview. And if you are fortunate enough to have an interview with any one of these investment banks, how do you prepare? Well, one of the ways of preparing is knowing some of the information that you're seeing over here. How big is the workforce of that company? What has been the last 12-month revenue or their most recent fiscal year? Also, what does their balance sheet look like? Equity versus debt. And you can even read the most recent quarterly earnings report just to get a feel from the CEO of the organization on how their investment banking business is doing, how their capital market business is doing, how their lending or investment side of the business is doing. What are they saying about the overall economy, and how are they pivoting or operating in this current economic environment? So paying very close attention to the investors' relations, the earnings report from any one of these companies could give you an edge going into any one of those interviews. So that's one way of preparing for any upcoming interview. And I may even provide more insight. How do our Romero Mentoring analyst students prepare for any upcoming interview? Well, number one, they tend to do deep research on each company that they're going to work on. What do they focus? What is their area of specialties? What has been the biggest merger or acquisition deal that they've advised on? What group are you interviewing for? How big is that group? What are the top 10 companies in that industry that the group focuses on? So part of you preparing is doing your due diligence on the companies that you're going to be interviewing for. So that's another way to prepare for any upcoming interviews that you may have if you want to work within any one of these firms. In the upcoming slides, I'll give you more information on the buy side. What are the top 10 buy side firms and also consulting firms if any of you are interested in pursuing careers in consulting. Now, here's a diagram. This is more of a flow chart on the economy, where the pockets of opportunities are, and how you can transition from one area to another when you're really looking at a long-term career. So just out of curiosity, and this is a little bit of participation now for all of you that are in this call. How many of you are freshmen? You know, if you're a freshman, type you're a freshman in college. If you're a sophomore, junior, senior, please type that. I want to get a poll. So this is, participation now. So I'm asking each and every one of you to state, what level are you from an education and career standpoint? I just want to get a consensus just to see where you're at. Okay, so some of you are seniors. Okay. Hey, Madeline. Okay, so you're a sophomore, Madeline. Okay. Neja, okay, you're also sophomore, Neja. Okay. Ernesto, you're a senior. I see that. Tenjiam, you're a junior. Okay. Okay, and then I continue to see here, most of you are at the undergraduate level. Okay, so that gives me some perspective. Hey, Dylan, I also see you here, Dylan. How are you, Dylan? Okay, so for the most part, at the undergraduate level, most of you are over here, right? You're finishing up your undergraduate education, learning about finance, learning a little bit about investing, and trying to also get internships so that you can break into this ecosystem. Most individuals will start out here on the sales side, investment banking, or you will start on the consulting side. And you could later transition from investment banking to corporate development within any of the Fortune 500 companies. After doing 2 years on the sales side, some individuals might transition to the buy side. They'll work at a hedge fund or at a private equity firm. And some individuals might even go and work at startups or tech firms, or even in venture capital. So these are 4 different areas of career opportunities that each and every one of you may have. Now, how do you start? Where do you break in? How do you prepare? We've provided more information on a specific blueprint in the upcoming slide to answer that question. But from a bigger picture standpoint, you should have a long-term view. Just like any corporation has a 5, 10, 15, 20-year perspective. You as the individual should also have one, and then reverse engineer what that path looked like. Okay, so for example, if you want to be a managing director of investment banking, well, how do you get an internship? How do you move up to an investment banking analyst role, and then the associate, the VP, director, managing director role? The same applies in consulting, hedge fund, and private equity. But here's what most recruiters or hiring manager will not tell you if you are struggling to find an internship, an offer, or get your foot in the door, right? This is very important. Are you struggling to find a job or internship in finance? And here's why. There's three main reasons. And these three reasons have really come from us at Romero Mentoring, working with hundreds of individuals and helping them break into Wall Street, into the buy side or the sell side. At one point or another, these professionals face these three challenges. Number one, they lack technical skills. They were not able to explain the relationship between the three financial statements. They were not able to answer how to value a company. They were not able to walk an analyst through a discounted cash flow or a DCF analysis, and even answer more complex tax, M&A, or LBO questions. So number one, that might be a risk, but you need to take initiative and improve your technical skills. Number two is having no relevant finance or investing experience. If you haven't secured relevant internship, that means that you might be at risk of obtaining an opportunity at a bulge bracket bank. If you do not attend a target school, one of the top tier elite schools that these investment banks may pursue, might also be a risk. And last but not least is having a poor resume format, weak interviewing skills, poor branding, and in many cases, you don't have a career coach. You don't have a professional mentor that can give you a blueprint, that can share with you a system that is proven of delivering results so that you can transform yourself into a young professional. So if you are facing any one of these three challenges, most of the time are the reasons why individuals fail to break into the industry. Now, we have created programs to help students transition so that these weaknesses become strengths with our internship analyst prep program that we've designed for many students. So these are the reasons why many individuals fail to break into finance. We can even include here not having a strong network, not networking properly, not being proactive or taking enough action to meet enough individuals could also be a variable or a determining factor. But ultimately, if you have any upcoming interviews for careers in finance, you have to be prepared. Otherwise, it will show during those interviews that you may have. And even when you're networking with other professionals, if you're not polished, if you're not prepared, if you don't have the right information, and if you don't know how to ask proper questions, it may also seem as professionally not mature, and you're probably not ready for those competitive roles. But here at Romero Mentoring, we've created programs to help you develop these skills, to have an internship placement so that we can correct all of this and make you a top tier candidate. So we do have solutions to help you break into the industry. And after you understand that, then you got to ask yourself, why do you want to pursue finance? And this is a common question that you're going to be asking in an interview. And how do you frame your response? It's extremely important because it helps the interviewer understand your thought process. Are you analytical? Are you detailed oriented? And have you done your homework and research to work in a very competitive field? So here are some of the reasons why many individuals decide to go into finance, which, by the way, you can internalize this. You could borrow some of these responses, make it your own, and hopefully it serves you well. So number one, well, finance impacts our daily lives. It affects everything. It affects food, transportation, home prices. It also affects your retirement, how much you're going to have in your 401k or in savings by the time you retire plays a major role in the quality of lifestyle that you're going to have. You also are able to trade future prices. And I'm pretty sure each and every one of you, when you wake up in the morning, when you eat breakfast, you don't think about it. But if you have a finance framework, if you want to understand the world of finance, start to think about it, right? What does the supply chain looks like when you're eating a load of bread, or when you're eating rice at the table, or when you go to your home and you open up the refrigerator? Every product that you see in your refrigerator, think about it. What was the assembly line for that? How much did it cost? What was the labor? Was this a commodity? Was it affected by inflation? Am I paying more for this product today than what I did last year? Especially gas prices, right? So finance affects everything. Money and capital is the fuel or the blood of our economic nervous system. So when you look at it from that perspective, you begin to see that finance is all around us. And it's the one element, I would say, that connects all of us. Money, capital, currency connects all of us in one shape, way, or another. And it's a very powerful tool. And if you understand that language, it gives you a competitive advantage. Now, you could take that response and structure it in any way that you want, that it suits you, and it can make you stand out on why you truly want to work in the finance industry. Number two, is it for the money? Well, many individuals also go in finance because it's a career that has unlimited upside potential. Yes, you can be rewarded, you can make a lot of money, and there is the opportunity also to work with very smart individuals. Now, let's compare what someone would earn in finance versus the rest of the US economy or the average individual in the US. Folks with a finance degree earn on average $73,000 a year. The average salary in the US for 2020 was $56,000. So just because now you're in finance, working in the industry, you will get perhaps a pay bump. You're going to be making 20 or 30% more than the national average. And this is very important information for you to have when you're making these decisions. What's going to be your major? What's going to be your first job after college? Where do you want to be 5, 10, 15 years from now? Always look at the earnings potential of whatever career field you decide to enter. Now, when you look at Romero Mentoring analyst prep students on the undergraduate level that complete our program and successfully work in investment banking, our students are averaging $120,000. And this is not just if you go into investment banking. This also applies if you go into corporate development, if you go into consulting, hedge fund, or even private equity. So students that have completed our program do earn more than college students without our program or that do not end up going into the finance space. And when you look at the earnings trajectory for investment bankers, okay, at the analyst level, typical age range between 22 and 27 years old, you're earning on a base salary anywhere between 85 and 95,000. And then your total compensation with bonus is anywhere between 130 and $200,000. This is what first year investment banking analysts at reputable firms are earning. So this is why, number one, it's very competitive to break in, but it's one of the fastest track for upward mobility, for you to earn money or six figures straight out of college. This is why a lot of undergraduate students want to pursue careers in finance, because you're going to be earning six figures as a 22, 23-year-old straight out of college. And as you continue to move up the hierarchy, look at the earnings potential. Your salary is growing faster than US GDP. Your salary is growing faster than any other average job. In many cases, you're getting a 20 to 30% increase in salary every single year. You become a growth stock. You become a growth individual from an earning standpoint. So this is another main reason why individuals want to go into the finance industry, because of the upward mobility, because you're working with very smart people, and also unlimited earnings potential. So to summarize this slide, why do you want to work in finance? Or for me personally, why did I decide to go into finance? Number one, finance impacts everyone. Number two, money, currency, and capital connects all of us, one shape, form, or another. Number three, you get to work with very smart people. Number four, an enormous amount of responsibility. And number five, unlimited earnings potential. Those are the reasons why I decided to join finance many years back when I was an undergraduate student. So that's one of the reasons I went into this field. And for those of you in this call, hopefully you can internalize some of that response and make it and turn it into your own. Okay. Now, here's the hierarchy or the traditional career path within the finance, the sell side, investment banking, or the buy side, if you're considering to do any of that. So typically, at the undergraduate level, you start out as interns. Typically, during your junior year is when you have that internship that can turn into a full-time offer, and then you join at the junior level. In investment banking, this is known as an analyst or investment banking analyst. If you go to the buy side, this is known as a junior analyst, typically a recent undergraduate student. If you decide at some point in your career to go into venture capital, start a business, become an entrepreneur, you would typically become a VC analyst. And the experience to become a venture capital analyst would normally require you to have worked at some startup, would require you to have marketing experience, sales experience, and some finance experience. Not too deep or heavy finance, but enough where you could build a model and you could do very simple valuation, okay? When we go back to investment banking, which is on the sell side, right? After the analyst level, then you get into the associate level, then you arrive to the VP level, and then the director or managing director level. And typically, it'll take you anywhere between 10 to 15 years to reach the managing director level. And in investment banking on the sales side, earnings potential at the managing director level is multiple seven figures. If you're a top performer, if you are a hardworking individual, and you are excellent and above average in your craft, you're definitely going to be earning multiple seven figures, and you will be working directly with CEOs and CFOs of multi-billion-dollar companies. So if that's something that excites you, if that's something that seems rewarding, then investment banking could be a great career path to get your foot in the door and have upward mobility. Okay. Now, as I'm going along these slides, feel free to ask any questions. I'm definitely be able to give you some perspective and clarity if you have any questions. So by all means, participate and feel free to ask questions. Now, in the third section of this presentation is to know yourself. Before you embark in any career path, make sure that you understand, is your personality, are your strengths and weaknesses conducive for this career field? Are you going to excel? And part of understanding this is through taking a personality test, having multiple tests to see what is your personality profile. One that is very popular is the Myers-Briggs personality test. You can definitely take that and see what is your profile and what type of jobs or career path might be suitable for you. So when you're going to be in finance, you need to understand these things. Do you have a high level of openness? Are you open to ideas? How conscious or self-aware and dependable, reliable are you? Extroversion, are you an extroverted individual? Are you shy? Do you have any reservations or problems or issues speaking what you have in your mind or communicating with others? What is your level of agreeableness? Are you someone that likes conflicts? Are you someone that likes to challenge the other person? Maybe you could be a lawyer. Maybe you could be a negotiator. And neuroticism. Where is your level of emotional intelligence and emotional stability? This is extremely important for you to learn, and more so about yourself. And here's an interesting perspective. This is something that I've learned over the years of being a mentor. And that is, in college, at the university and academic level, most of the time and everything that you're learning is meant to serve the corporation. 90% of all of the information that you're consuming is meant to serve the corporation. It's meant for you to develop a skill, have a job, become a top performer, earn money, but ultimately you're serving the corporation. That's 90% of what all education is all about at the undergraduate level. 10%, it's only focused on you, the individual. You go to the career center, you fix your resume, you have interview prep and mock interview, and then good luck. See if you can really understand who you are as an individual. That's only 10%. So this whole side of serving the corporation, earning a degree, has an imbalance where you only spend 10% of the time on yourself. And what I tend to mention to our student is to flip it the other way around. You should focus 90% of your time of developing you, the individual, knowing your strength, knowing your weaknesses, having experiences around leadership, working in teams, understanding your personality type, and then looking at what career path is going to make you fulfill, is going to make you happy. Because once you find those opportunities, it's not going to feel like work because you're actually going to enjoy it. So start first by focusing 90% of your time on you. Develop yourself. The other 10%, could be what you're going to learn in academia. A lot of it is concept, theories, terminology, which many of those concepts are not going to really be applied in the professional world. We have a practitioner approach to how we do work for other professionals versus in academia. When you do work, when you do a class project or an exam, it's usually for the professor, and the professor is giving you a grade. The professor is not paying you for your job. In the real world, clients are paying you for your work product. So there is a huge disconnect between what you do in academia and what we do in the professional world. And the best thing that you could do as the individual is develop your interpersonal skills, your technical and your soft skills, in many cases outside of the academic classroom setting. Okay? So that's a little bit of mentoring and insight that I've learned over the years of working with hundreds of close to 1,000 individuals now, and learning more about what it is that they want to do and helping them develop the technical skills. I'm not going to spend too much time on this slide. This is something that you could pull up online. These are just the big 5 characteristics or personality traits under each one of the key personality traits for you to determine and learn. We're going to be recording this. We're going to share with all of you, and you can come back, pause this, take notes, and again, look at it as an exercise. Find examples and instances where you showed openness, where you were agreeable, where you had emotional stability, because these examples are going to be tools for you to implement or utilize during interviews. Okay, so very important slide and piece of information here. Now, what skills do you need to break into finance? This is very important. And this goes back to one of the top 3 reasons why many individuals fail to make the transition and break into finance. Number 1 was what? Lack of technical skills. Not knowing the basics, not knowing the foundation, which many of these skills you can be very proactive and learn it on your own. Here at Romero Mentoring, we have access to a free program that exposes you to accounting, Excel, knowledge of companies' operations, knowledge of industry, introduction to corporate finance, how to read and interpret SEC filings, and also how to pay attention to detail. So within our platform here at Romero Mentoring, we have the finance success track that exposes you to many of this. Okay? Now, typically you learn a lot of this information through self-study course or on the job through an internship. One of our programs, the Analyst Prep, actually provides an internship. You actually do receive internship placement after you complete all of the training surrounding your development and learning these technical skills. So again, one of the main challenges or reasons why individuals do not secure internships or jobs in finance is because they lack these skills. I already see that many of you are sophomores. Do yourself a favor, start learning accounting, Excel, business operations. You don't know where to start? Go and sign up to the Finance Essentials program. It's free on our platform at Romero Mentoring, and you can start learning many of these things. For those of you at the junior or senior level, if you haven't developed these skills, if you are looking to break into the industry, if you want an internship and you are looking to save time and catch up, then take a look at the Analyst Prep program, which is our internship program. That program will get you ahead of the curve and it will get you on track. So we have many different offerings and services and programs to help you at whatever stage you're at the undergraduate level. Okay. Here's more in terms of technical skills. Also, valuation. How do you value a business? Can you walk me through a discounted cash flow analysis? Can you walk me through trading multiple valuation or sum of the parts analysis? These are some of the things that you need to know if you're going into an interview for investment banking, equity research, hedge fund, or private equity. It's just there's really no excuse, if I'm being very direct and honest. If you're a sophomore, junior, freshman, or even a senior, and you're interviewing with a managing director or an investment analyst, and they ask you, how do you value a stock or pitch me a stock? If you do not have a clear, constructive framework on how to value and pitch a stock, you're not prepared. And it's going to look poorly on you. And you're not going to have a good outcome during that interview. Chances are that you're not going to get the offer. So the key really lies on your ability to prepare for upcoming interviews, for the internship, to perform like a top performer and secure that offer. So the key, again, lies in preparation. You control how much time you spend in preparing and developing yourself for the recruiting season. And once you get the internship, how you perform, which will ultimately determine whether you get an offer or not. Okay, so make sure that you understand this and you best prepare. Now, once you're prepared and you secure your internship, well, what is the type of work that finance professionals or investment banking analysts or equity research analysts actually do on the job? And this is important for you to know. Why is it important? Because during the interview, you can mention, well, I've read about fairness opinions. What's a fairness opinion? If this is the first time that you're hearing about it, well, you should look it up. Company strategic advice. I've looked at several case studies. I see how investment bankers provide strategic advice to billion-dollar corporations. IPOs. If this is the first time you're hearing about an IPO, you should look it up. I want to work on IPOs. I want to do investment analysis. I want to assist companies raise capital. I'm also interested in mergers and acquisitions. So each and every one of these bullet points is a type of work that investment bankers and finance professionals work on. You should have a general understanding of what each and every one of these areas are. And if you can work on a project, if you could review case studies, it would put you ahead of the curve than 90% of undergraduate students that have never heard about a fairness opinion. And do you have examples to back it up? Now, what is the responsibility of an analyst? Well, it's quite simple. Build scenario-based financial statements models. You're essentially projecting revenue. You're projecting cash flows, earnings, and whether or not the company needs capital to grow the business in the form of debt or equity. Create investment presentations. Typically, these presentations are for the CEO, the CFO, C-suite level executives, in many cases, board of directors, or portfolio managers that need the information to make highly impactful decisions. You could write research reports. Typically, research reports are read by the buy side, by investors, by portfolio managers. They want to see the opinion of an analyst. Are you bullish on a stock? Do you have a buy rating or do you have a sell rating? And of course, perform strategic consideration analysis. Well, strategic consideration analysis deals primarily with how the company is going to achieve their financial objective, how they're going to achieve their vision and mission, and how are they going to execute that plan? Do they need to raise equity or debt to achieve their financial goals? Do they need to hire more employees? Do they need to acquire another company? Do they need to engage in mergers and acquisitions? Do they have to sell or divest one of their businesses? So the more you understand all of these concepts, the better prepared you're going to be in an upcoming interview. And what we've done here at Romero Mentoring for students in our analyst prep program is that we give them a very deep and sophisticated understanding of each and every one of those points through training, through their internship, through one-on-one mentoring, and through our live lectures that we have every single week for our students. Okay? So I hope this is valuable information, and I hope you're learning more in reality about what it takes to be in finance and the type of work product. Now, here's some examples. These are research reports. This is the type of work that our students are doing here at Romero Mentoring. They're able to evaluate a stock, build the model, obtain market and industry driver information, and formulate their own opinion and state and write a very well-structured research report. They can also perform deep level valuation. This is a football field. This is just another way of providing information and determining whether or not the stock is undervalued or overvalued and what would be the rate of return on that investment. This is a discounted cash flow analysis. Okay, this is something that our own analyst students in our program are able to do, and then be able to talk about their discount range, which is WACC, weighted average cost of capital. A simple technical question that you may be asked in an interview is, how do you calculate WACC? Walk me through a discounted cash flow analysis. What was your perpetuity growth rate? Walk me to the formula of a perpetuity growth rate. So every sample work product that I'm illustrating here on the screen could be an example that you could talk about in an interview, could be a technical question that you could be asked, or you could do your own case study and present your own presentation, show your soft skills during an interview. That's the power of actually working with professionals, having a structured mentoring program that will give you an internship, give you the training, provide you one-on-one mentoring to accelerate your development and transform you into a professional. These are the things that unfortunately you're not doing in a college classroom setting, because most college professors weren't investment bankers, did not work at hedge funds, did not work in private equity, let alone were not entrepreneurs. So there is a loss in information and expertise from field practitioners that you're not getting in a classroom setting. Okay, but hopefully through this webinar, you're getting some of that information, right? Here's an income statement projection model that many of our analysts are doing. This is something that you can learn how to do yourself also. All you need to do is just take initiative, be proactive. Here's strategic consideration analysis. Should you raise equity or debt? Compare the company's earnings per share on a standalone basis versus a pro forma basis. Which one of the scenarios has the highest earnings per share result based on your strategic recommendation? This is now very high level. This is traditionally what managing directors in investment banking would be recommending to their clients. And our analysts, our students are actually working on this type of analysis within our program. Okay. Now, what are the typical finance professional personality type? And look, this is extremely important. Finance is very competitive. Oftentimes, you will find that many finance professionals were former athletes. They played a sport, either in high school or in college, and it's a field that does attract high performers. Now, what are some of these personality traits? Well, these are people that are highly motivated, highly competitive, highly ambitious, extremely intelligent, they're goal-oriented, and they're, in many events, entrepreneurial. And one of the measures that investment banks and the buy side look at to determine how competitive you are is your GPA. And the median GPA at Romero Mentoring, it's 3.75. That's what the average GPA is, or the median GPA for students in our program. Now, we do have students that have a 3.0. We have students that have a 2.7. For many reasons. They might have had a bad semester because of family circumstances, their own individual challenges. But what we tend to do is to level the playing field by giving them very strong technical soft skills and giving them an experience through our competitive internship to help them move the ball forward, to help them rebrand, and give them another opportunity to perhaps break into the industry. But ask yourself, are you motivated? Are you competitive? Did you display any one of these traits? If the answer is yes, then okay, finance could be a great career path for you. If the answer is no, then don't worry about it. You could probably learn financial modeling and business valuation on your own and maybe go into a different career path, but at least you've developed some level of financial literacy. You've developed some sense of finance and financial statement analysis, which will serve you well later down the road in your career. So you don't necessarily have to have all of these traits if you want to be successful in a different career field. But it is definitely a main requirement if you want to be a top performer, if you want to be, the 1% in any area, an actor, a musician, a doctor, a lawyer. If you want to be at the 1%, the traits that all of those individuals have as a common ground are the ones that I'm illustrating right here. Okay? Now, what are now the top firms? We've looked at some of these. We've went over investment banks. Make sure that you have a list of application for the internship, the deadlines, by when you need to submit your application for each and every one of these firms in order to increase your chances of breaking into the industry. You can also look at some of the top consulting firms. And again, if you're successful to get an interview, make sure that you understand the interview process, the culture of those firms, what was their revenue for the most recent fiscal year? Is the company public or private? How big is the workforce? What are they known for? Make sure that you do your due diligence on the organization that you're going to be working for. Here's the buy side. Here's some of the top hedge funds that are managing a significant amount of money. So you have BlackRock. BlackRock has 16,000 employees managing, we could round, $6.7 trillion, $6.9 trillion of assets under management. That's a big number, okay? Then you have AQR, which is a hedge fund, 1,000 employees managing $185 billion. Then you have Bridgewater, Main Group, Renaissance, Two Sigma, Millennium, Elliott, Citadel, and Davidson Kempnerson, right? All of these hedge funds are on the buy side implementing different investment strategies. If you like investing, if you like the stock market, well, make sure that you familiarize yourself with the strategies that each one of these firms implement. Also, what are their skill sets? What are they looking for? And spend the necessary amount of time preparing yourself to become a top candidate, to be a target individual that the firm is willing to hire for an internship opportunity at any one of these firms. And again, the average starting salary, if you are in front office or in an investment making decision role, is well over 6 figures. So opportunity to work with very smart people, opportunity for upward mobility, have unlimited earnings potential. Any one of these firms can provide that, but you have to prepare. You got to spend enough time preparing yourself. Okay. Now, what is the roadmap? What does a successful roadmap look like if you're a college student? At the freshman level, okay, here's what your main, areas of responsibilities should be. I saw that there's a few of you that are freshmen. Well, number one, perform your career due diligence. What career path do you want to have? Do you want to be in healthcare? Do you want to be in technology? Do you want to be in finance? Do you want to be in the investment industry? Make sure that you understand what career path you want to be in. And remember, you can change. But if you change your senior year, you're going to face some challenges because you haven't had enough time to prepare. So number one, start to explore different career paths. Number two, join student clubs. Take leadership roles for you to develop personally, for you to gain a teamwork experience and work on different projects. Number three, make sure that you start networking and find a mentor. Number four, start to develop your technical skills early. Number five, start applying to internship opportunities. It's sometimes challenging for freshmen to find meaningful and impactful internship opportunities. You may want to consider working at startups. You may want to consider doing things in marketing or sales level positions for you to learn some of the core essential skills in business. And I'm pretty sure that you'll be able to find those type of opportunities. Also, career programs. Obviously, our analyst prep program would fall under that category. And last but not least, make sure that you have a competitive GPA your first year out of college. So these are the 7 priorities or actionable step that you should focus on and accomplish your freshman year. Your sophomore year, then is when you begin to develop more of your interpersonal skills through more leadership activities through student clubs. Then you start focusing on interview preps. Start to apply for sophomore leadership programs. Also begin to apply to sophomore internship programs and continue to develop your technical skills. Again, Romero Mentoring Analyst Prep Program, it's a great fit whether you're a freshman, sophomore, junior, or senior. You could get the biggest return or the biggest ROI doing the Analyst Prep Program while you're an undergraduate student. The sooner you do it, the better, because it gives you time to develop, time to prepare, time to make mistakes, gain experience, so that by the time your junior year comes, the amount of information and experience that you've acquired is the equivalent of someone having 2 or 3 years of full-time professional experience. That's why it's so important to start early, okay? And how many hours a week can you spend working with schoolwork, studying, preparing for exams, extracurricular activity, personal development? Anywhere from 60 to 70 hours while you're a freshman. Your sophomore year, 80 to 100 hours. Now you're mimicking what a finance professional is actually working. So when you go to an interview, you can say, look, I've prepared to be in this industry by being very proactive, taking leadership roles, being a top performing student. And when you account for all of my responsibilities, I'm working 80 to 100 hours a week as well as an undergraduate student. So I've already been preparing myself to enter this space. That's a very strong example that you can use to convince or win someone else's trust and show through actions that you're actually prepared to work in this industry. These are some of the things that I did when I was an undergraduate student to help me secure multiple investment banking internships, full-time offer in mergers and acquisitions, and also work on the buy side as an equity analyst and trader as well. Now, at your junior and senior level is when you begin to pick things up. So most of the work that you did your freshman and sophomore year will begin to pay dividends your junior and senior year. Your junior year, you're now taking more leadership roles within student clubs. You're starting to prepare for interviews. You begin to apply for junior internships. You develop your technical skills. Prepare for junior summer internship programs. Acquire the best practices or skills on the job. Attention to detail, group fit culture, gain more confidence, ask questions, become a team player. Again, all of the hard work happens your freshman and sophomore year, so that your junior year, you're able to go through the recruiting process showing what you've done. It's like when you've prepared for college, your freshman, sophomore, and junior year, so that you can obtain and land your top 3 universities, your top 3 target list. Well, the same framework, the same approach or philosophy applies to when you're trying to enter a career. The preparation begins your freshman and your sophomore year, so that your junior year, you can now showcase it. You can brand yourself and you can market everything that you've done. By your senior year, it's when you can begin to wind down and take a step back. Look at the amount of hours. Your junior years to your senior year. Your senior year is when you can start to pass the baton to freshmen, sophomore, and older juniors. So this is where you can focus on transitioning your leadership. This is when you start to end your academic semester strong. Should actually have an R. Lower week hours to 40 to 50 hours a week. Map out a 5-year career plan. Study for your GMAT. Study for your Series 7 and 63. So your senior year, after you secure a full-time offer, is really preparing yourself to enter the professional world. And again, map out, once I start working full time, what do I need to do in those first 3 years, in those first 5 years to help me achieve what I want to accomplish by year 5? So you're always planning, strategizing, and executing for what your vision will be every 3 to 5 years. And all of the legwork happens, or all of the preparation happens in the first 1 to 3 years. So it's a very important concept or viewpoint to understand. You're really accelerating your own development. Now, how can we help you, right? How can Romero Mentoring help you break into the industry, transition, become a professional? Well, we've created, several programs, right? Number one, we have interview preparations, right? We can review your resume. We have mock interviews, and this is more of a consulting type service. You can go to our website and request whether you want us to review your resume, recreate it, help you prepare for any upcoming interviews, do mock interviews as well, so that you can impress the interviewer and make sure that you secure that offer. So that's one of the ways that we can help our students. The other way is through self-study online courses. How do you develop financial modeling, technical, soft skills? Well, it's through either of these courses that we have available on our platform. We have the Business Essentials course, and we have the Stock Investing course for beginners. If you want to be on the buy side and work at a hedge fund, strongly recommend the Stock Investing course for beginners. If you want to work in investment banking or private equity, then the Business Essentials program, it's essential. It's a must. And if you're someone that needs more help and you're looking for an internship and you want mentoring and one-on-one attention, then the Analyst Prep program, it's the perfect fit. This is our flagship product. This is a product that we've helped hundreds of individuals break into the finance industry through investment banking, private equity, hedge fund, and even corporate development. So this is the program that, it's longer, but it has the internship component to help you transform and become a top performer. And last but not least, our last program is the Final Success Track. This is available on our platform. It's free. You can enroll and sign up for this with 2 simple steps and have access to our platform. And again, folks, this is the career path. And if you are at the undergraduate level, if you are right here, then I think I've provided you with enough information to really understand that preparation is key. Preparation is essential for you to secure these highly competitive roles where the earnings potential straight from undergrad is multiple 6 figures, where after 15 years of a professional career at the managing director level, at the executive level, your earnings potential now begin to look like 7 figures or higher if you're amongst the 1%. So this is really about you. This is really about helping you prepare, giving you the right information. But ultimately, you have to commit. You have to spend in the time if you're serious and you want to get that competitive advantage, because you're going into a field that is extremely competitive. All right, folks, with that being said, I'll end the session here. I hope this was informative. Hopefully you can apply to any one of our programs, and I'll look forward to working with each and every one of you. Thank you. Take care. All right, folks, for those of you that